Welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Datia. We have with us Mr. Neeraj Jain, Chief Financial Officer at Cosmo Films, joining in. Welcome to the show, Neeraj, and a pleasure to speak to you as always. Neeraj, my first question coming to you is overall, if you go to see in terms of the last 18 to 24 months, yes, it has been a turmoil. However, for the FMCG space, as a good, we've seen, as a space, we've seen good growth coming in, which obviously in turn translates to companies like yours as well. How would you describe that transition over the last 18 to 24 months for you?
Well, as you rightly pointed out, actually FY22, or rather the last 2 years, has been excellent for the company. A couple of reasons. One is in our business, we broadly classify it into commodity part of the business and specialty, the value add part of the business. So we could grow significantly our volume for the value add part of the business, which is a high margin and much stable business compared to the commodity part. So FY22, 63% in volume terms we did from value add business, which has grown 18% compared to last year. And in fact, from the last 3 years, this business has been growing between 18 to 20% year on year, which worked very well for the company. Second, of course, the because of industry demand and supply scenario has been running fairly balanced. So the BOPP margin has been running fairly well. And third, of course, our overseas subsidiaries did very well in FY22 particularly. And very clearly, there's an uptrend in the overseas subsidiaries performance. So I think these three key factors contributed for last 2 years better performance.
Right. So overall, with this continuing, how are you expecting, has that trend continued now, or do you think that was pent up demand?
So let's divide this question in 2-3 parts. So one, on the specialty value add business, we are fairly confident this growth will continue. So 63% volume terms FY22 should grow between 18 to 20% for the next 2 years. What we are broadly looking at, target of 80% in volume terms to come from the value add business. And at that point of time, a significant part of the business will be decommoditized business model. Then what we are looking for. Second, of course, the BOPP margin would largely depend on industry demand and supply scenario. But as I indicated, I think broadly there is expected to be balanced demand and supply scenario for the next 2-3 years in BOPP in India. So I think that should be that would definitely drive the BOPP margin. But beside this, there are a lot of new initiatives which company is taking. First, our new line for BOPET, which we call a specialized BOPET line, actually, should commence operation from end Q2 of current financial year. So that will add to both the volume and bottom line to the company. So this will largely drive the new growth for FY23. Going forward, also we have a fairly ambitious plan to grow both the flexible packaging business and otherwise. So for flexible packaging, broadly we are looking for 2-3 of our existing capacity to get added over the next 3 years period. So that will substantially grow the flexible packaging business for us. And one of this line is specialized BOPET line, which will largely focus on specialty films, which will be largely like heat control film, PETG films. They are the high margin products. Second line will be BOPP line, which will be world's largest production line. And with the larger production line, your cost of production will be generally lower. So that's drive is expected to further drive the margins. Third will be CPP line, which will be largely focused on sustainable kind of the films. So for future products, that's the key production line which will drive the sustainable kind of the flexible packaging demand.
Right. So overall, currently, what's the capacity and how much are we adding in 23?
So very broadly, currently we have nameplate capacity of close to 200,000 metric ton.
Hmm.
And in FY23, we are going to add close to 35,000 metric ton nameplate capacity in form of the specialized BOPET line.
Hmm.
Next, BOPP line, which is expected to come after 3 years. This will be close to 67,000 metric ton nameplate capacity.
Hmm.
And of course, the CPP line, which I mentioned, should have close to 25,000 nameplate capacity.
Right. And overall, currently, what's the capacity utilization if you have to see on a blended basis?
So we are running almost close to full capacity utilization. So, I mean, depending on the some maintenance shutdown between 96, 97% to maybe at times 99% also. That kind of utilization company is running.
Okay. And overall, if you see in terms of where, crude goes, that is one of the biggest factors that does impact packaging companies. How have we seen the impact on the back of higher crude prices?
Well, very frankly, if crude goes up, one of our key raw material, we call it polypropylene, that will generally go up. May not be in same correlation, but yes, I mean generally goes up. But with higher rate of polypropylene, what generally happens is your working capital level in the business goes up.
Hmm.
But from the margin perspective, it's largely a pass through. So it's a myth actually for this industry that higher crude may adversely impact the margins.
Hmm.
This will not necessarily be a case. Margin actually is a function of largely demand and supply scenario in the industry.
Hmm.
If that's expected to be fairly balanced, we really don't think that higher crude level will impact adversely the margins.
Right. And overall, if you see in terms of the specialty chemical business, which is Masterbatch, what's the outlook on that front? Because clearly, Cosmo is planning to produce all master batches for captive use and niche specialty focus for outside sale. So, what is the target? What are we looking at in terms of growth? Because clearly, the industry is seeing some good growth now.
No, of course. You see, in terms of growth, we are looking for three pillars for growth. First, on the flexible packaging, which I indicated, two-third capacity expansion, which company is going to do. Second will be on specialty chemical. Specialty chemical currently has master batches as the key business. Beside this, textile chemical is there, and adhesive we are just going to launch. So taken together, we are looking at close to 400 to 500 crore rupee of top line from the specialty chemical to come over the next 4 to 5 years. That's a broad target we are looking for. And it's a high rosy business, as you are aware. So that should add to the overall, rosy improvement for the company. Third,
Right.
therefore, the growth is expected to be pet care division, which is under the name of the Ziggly,
Right.
which is expected to do fairly well. We are looking for high growth in this vertical. So again, I mean, we are looking for ambitious number in terms of the 80 to 100 kind of these stores to get open over the coming years.
So in terms of the pet care vertical as well, where are we in terms of revenue contribution? How much are we looking to scale up Ziggly? Because clearly, the plan is to then demerge the pet care vertical into a separate company in the medium term. So, what does that strategy actually look like?
You see, as you are aware, we just started in FY22 or the second half of the
Correct.
FY22 Ziggly. And for the current financial year FY23, broadly, the company is looking at 15 to 18 stores to get open at different places. And this will largely be in the tier one kind of the cities as of now. But in the medium term, over the next 3 4 years, we are looking at 80 to 100 stores to get open. But that's more. That will not be only retail focused growth. Online will also grow, and the company is focusing a lot on the online growth. So it will be a multi-channel kind of the sale coming from the pet care division. And the pet care, we are looking for again ambitious numbers, close to, I mean, the 400 crore kind of the top line we are looking at over the next 5 years to come from the
Hmm,
pet
hmm.
care division. For this kind of business, it's a significant number.
Correct. And overall, if you see in terms of the total investments as well on the expansion front, we're almost looking at close to 900 crore worth of capex investments in various from BOPET to BOPP to CPP as well. So, how are we looking at funding it? Is it through internal accruals or will it be through internal accruals and some portion of debt?
Sure. So it will be a mix of internal accruals and debt. And that too also, it will be largely, foreign currency denominated debt, which will
Hmm,
be fairly low cost debt in that sense. Having said so, the 900 crore out of 900, 200 crore company has already spent in FY22. So broadly, we are looking at close to 700 crore rupee of capex to be done over the next 3 years. That too, large part of this will be on the specialized BOPET line, CPP line, and the BOPP film line, which we discussed. Besides this, the Ziggly and Specialty Chemical, they are the not the businesses where you need to do a lot of capex. I mean, it will be largely OPEX in the pet care division. And a large part of the capex in specialized chemical we have already done in FY22. So broadly, to sum up for you, we are looking at 700 crore of the capex in next 3 years.
hmm.
And cash generation in the business is frankly educate to address this kind of capex.
Right. And overall, clearly in terms of if you have to look at B2B versus B2C, between the two, where are we going to focus on to grow? Because clearly in terms of B2B, we have achieved growth. We've received a position there. Now is the time to grow the B2C segment as well. So are we going to really spend in terms of advertising, marketing on that side?
Well, yes, I mean, B2C business will be largely direct to consumer business for us will be Ziggly.
Hmm,
For Ziggly's growth, yes, I mean, we need to do advertising as well. But at the right time, the broader strategy is first to have the presence at the right places, and that to a significant presence, and at the right time then start the branding, the advertisement, and etc. Beside this, we are also looking for launching some of the B2C products in our packaging film business,
hmm,
like the heat control film, the some of the specialized chemical which will
hmm.
be B2C on the B2C platform. So with the time, those are also expected to grow. Idea is to completely transform the company over the next few years in the form of clearly two large verticals, B2B and B2C. And of course, a large part of the growth is expected to come from the film business.
Right. And overall, anything else, Neeraj, that you think that investors should know from here on with regards to what Cosmo Films is doing? Anything that we've missed according to you?
No, I think there are various, I mean, the ambitious plan for the company on all the three key verticals which we discussed: packaging film, the specialized chemical, and the pet care. So they are expected to be, exciting time to come.
Absolutely. Exciting times ahead. Last couple of years have been really strong and hope the trend continues because India as a market is a very consumer driven market. So this is the space to be in as we speak. But thank you, Neeraj, so much for joining us on the show. It's always a pleasure to speak to you, get insights. Thank you. Stay safe and speak to you soon again.
Thank you. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.